Hello again, Price Masters. In the previous section, I covered the question who Price Master Pro is for, who are the users, and what to expect, and if you were to upgrade, and when you should or should not upgrade. Now, in this section, I'm going to go into a little bit more details as to how Price Master Pro works, and this might be one of the longest section in this whole video, so bear with me for a minute. Some of the information I'm about to cover is already available in the mini course, in the mini ebook that I've mentioned earlier on the website. So it's a good idea if you want to download, if you want to pause this video, go ahead and download that bonus ebook so you can have it as a reference to cross-check what I'm talking about. If you'd like. I mean, you don't need to because I'm going to be covering some of that information here in this video, but it's a good thing to have as a visual aid. So how does Price Master Pro work? The principle under which Price Master Pro works is the principle of confluence or the principle of clustering. Okay. So Price Master Pro uses the principle of confluence or clustering to determine projected price levels that are present in the market for a particular period. Now, what do I mean by conversions or what do I mean by confluence or clustering? The definition, or the way what I define or how I define confluence or clustering is the convergence of two or more elements to a common probable outcome. Let me say that again. I define confluence or clustering as the convergence of two or more elements to a common probable outcome. What do I mean by common elements? In Price Master Pro's particular case, I am talking about Fibonacci levels. A single Fibonacci projection, i.e. one line, one price level, is the common element. And what is the probable outcome, in my case, is market reaction to that price level. So to say it differently, confluence or clustering is the convergence of two or more Fibonacci levels to a common market reaction. That's another way of saying it. Now, what is that market reaction that we're expecting, or the common outcome, the probable outcome market reaction? What I mean by that is that particular level or market behaving around that level as though that level was support or resistance. Okay, so clustering or convergence is the convergence of two or more Fibonacci levels to a common probable outcome or common market reaction by reacting to that level as support or resistance. Now, we don't know why the market behaves that way around those levels. Okay, some say it's because of market psychology or trader psychology, participant psychology. Some say it's because of natural causes like planetary interaction or gravitational fluctuations. Whatever the case may be, all we know is that the market does react to these Fibonacci levels. Okay, and our goal is to capitalize or take advantage of that phenomenon. Okay, now you have already probably seen confluence or convergence, but in a different fashion. You probably don't refer to it as confluence or conversion. You most probably could refer to it as a setup. That is the setup you look for when you're trading. Well, how do you make a decision when to take a trade? You look for confluence or convergence among several indicators to indicate which direction the market is likely to head. So your element in this case is your indicator, and your probable outcome is the direction by which the direction the market is going to go. Now, whatever indicator you use, whether it's moving averages, RSI, or MACD, or any other indicator, what you normally look for is for all these indicators, or the majority of these indicators, to say the same thing, to confluence on the same probable outcome, and that is buy or sell. So that's probably a more common view by which you're familiar with confluence or clustering. Now, I'm just taking that same concept and applying it to something slightly different, and that is Fibonacci projections. Now, confluence and clustering is not just limited to price. As I mentioned, it's also applied to indicators. You're looking for conversions of indicators to tell you the same thing. You're looking for conversions of price Fibonacci levels to tell you, whether it's support or resistance, but you can also apply it to time. So you can also have confluence of time, and that's where you get Fibonacci time zones that tell you, when, not where, the market is likely to reverse direction. Now, so when I say Fibonacci levels, which levels am I talking about? Okay, so what I'm going to talk about next are these Fibonacci levels, and I'm going to go through them briefly right now, but they're also covered in the ebook as I mentioned. Now, there are two types of Fibonacci price projections. There are internal projections and there are external projections. And what's the difference? An internal projection is when you're expecting price to reverse direction from a previous trend and move in the opposite direction inwards of the range of the previous trend. So let me show you this on a chart. What I have here is the euro-dollar cross on the 1 hour time frame. I have a retracement study applied on the most two recent and static price swings, and not the entire span of the price chart, just to make it easy for you to see. I've also applied the zigzag indicator. Price Master Pro doesn't use zigzag, but it's the easiest way for me to show you the swing that I'm talking about and how it works. Now, if I were to identify this swing right here, okay, so which direction is the market going here? Obviously, it's going upwards. It's going in a bullish trend. Now, when I say price retraces or an internal retracement, I am expecting price to move from wherever it is here to move inwards. So the price range is from up here to down here. So I'm expecting price to retrace in that direction. Okay, that is an internal retracement. Now, Ellioticians will refer to it as a corrective wave going down that way in reaction to an impulse wave going upwards that way. So because price is going inside the range between this line and this line, it's not going up here, it's actually going backwards in that range, that classifies the retracement as an internal retracement. Okay? Now, what I have here are two retracements, the major one and the minor one. So if I am to delete these two lines and mark price level stopping here, we have retracement 1 from this level, we have impulse wave from this level to this level, and we have another impulse wave from this level to this level. What you will see here is the big swing right here has the following levels. So we got a 38.2% retracement, a 50% retracement, 61.8% retracement, 78.6% retracement, almost 100% retracement, but not quite. So because price did not break the 100% level, it still qualifies as a retracement, even though it's almost 99 point what, God knows what level. But nevertheless, this whole downfall right here is still a retracement of this swing right here. Now, we also have this wave right here, this impulse, which is a retracement to that one. And that's where we have these price levels right here. So we have a 38.2%, 50%, 61.8%, 78.6%, and 100%. Price in this particular case moved downward, down to this level, and only retraced up to the 61.8%. And then continued the retracement for the previous swing all the way almost down to 100%, but not all the way. Okay, so this move is internal to this price range, while this move is internal to this price range. Okay, hope it makes sense. So an internal retracement is when the price retraces inside the previous range of the impulse wave. Okay. Now, let's talk about the other type of price projections, which are the external price projections. There are three of those: expansion, extension, and alternates. And I'm going to go through each one of them in a moment. Each one of these projections require a two-wave pattern or three swings. Now, if we recall, in the retracement, we only required an AB pattern or an AB pivot point or a single wave, which is the pink one I have outlined here, from this level to this level, or from this level to this level. External projections, on the other hand, require these two. They require an impulse wave and a retracement in order for them to be drawn or to be projected. So in this particular case, I have them labeled in yellow. So you will need this point, you will need that point, and you will need this point to make a projection for this wave. Okay, this swing right here, we got a swing going up and a swing going down. You need three points to make an expansion projection, an extension projection, or an alternate projection. Now, do bear in mind, I'm just using this swing as an example. You could use any of these swings back here, but I'm using this one as an example, and I'm also using, if you see here, this is another one. So you got a 1, a 2, a 3, but you also got a 1 and a 2 and a 3. So we got two expansions going on simultaneously here, just like we had two retracements going on previously in this chart. Now, expansions and extensions and alternates are the same idea. They try to project price outwards of the swing price range. So in this particular case, we have a range that goes from here and here. And we also got the third point coming down here. So what expansion will try to do is to expand the range of point of the retracement wave or of the corrective wave, this one right here. Let me mark it. It will try to expand this range outside of the price range of this wave, of the bigger one. So it takes the range of the smaller retracement and tries to expand it beyond the major retracement. And it starts out at the 78.6%, which isn't really outside of range. You got to go over 100%. So the first extension outside of the price range is at 38.2%. And if I make this smaller, the 161.8% and the 200%. So when this move occurred, went up from here up to here, down to here, the expectation was, if price were to continue going upwards, is for it to hit this level. Oops. Whether it's for it to hit this level, or that level. Okay, that's the expectation for an expansion, expanding the smaller retracement range outside of the bigger swing. Okay, now the same thing can be applied for this expansion. We're taking the range of the smaller swing, this swing. Okay, now let me delete that one so we don't get confused. We're taking the range of this swing, and we're expanding it beyond the range of this swing. Okay, and that's what we get. We're expecting price to expand to the 138.2, the 161.8, the 200, or the 261.8. And obviously price in this particular point went down to almost the 200, went back to the 100, and then continued down to the 261.8 range. So as you can see, where the blue squares are, these big blue squares or big rectangles, they are outside the range. So on the upside, it was outside the range of this big move, and these squares or these rectangles were outside the range of this move. Okay, I hope that is clear. The same thing applies for the extensions, okay? The extensions are performed in the same fashion. It's just different ratios are used, and a different price point is used to create the projections. In the expansions, we were expanding beyond the big and adding it to the small. In other words, let's see if I can make this even better. So if I make that A, okay, if that's pivot point A, and I make this pivot point B, and this is C, and I'm using ABC because a lot of people are familiar with the ABC pattern. We're expanding the BC wave beyond the AB wave. However, we're starting out at point C. So this 100 started out at this level, C, and then went upwards, okay? With an extension, we are going to be extending starting at point B. So if we are to make lines, so we got a lever here. Nope, that one. Make a level here to mark the range. Take a level here. Okay, and then there's also a level here. Whoops, wrong line. Let's take that out. Here. And then we label these point A, point B, point C. Okay, so with extension, with expansion, I think I made a mistake, so I need to go back and correct. With expansion, we are looking at swing A, B, C. We're expanding range B and C and starting out at B. I think I said originally we're starting out at C. That's a mistake on my part. Scratch that. With expansions, we're taking the range from B and C and we're adding it to B. So it starts off here and it goes upwards. So this is 100%. If you take 138, you add it to this level and you go upwards. Okay? Opposite from what I said before. You're expanding the range of the small, adding it to the big. That's expansion. With extension, you're taking the range of the big, of A and B, and you're adding it to B. All right, so you're, if I can make an arrow, make life easier. Let's see, what should I use? I'm just going to use this. So we're adding it here. Okay, that's where we're adding. We're taking the range from B and C, adding it to B, and go upwards for this swing, A, B, C swing. For the B, C, D swing, so if I put a D here, okay, for the B, C, D, we're taking the range of the C and D and starting out at the C and going downwards. Okay? I hope I didn't confuse anybody. Okay? Let me make an arrow so that it is somewhat clear. All right? Now, for extensions, we are taking the range of the A and B and then adding it to the B to get the upwards projections. No, that didn't work. All right, let's use a different color. And we'll make that yellow. Okay. in here, and we're adding it to this point. All right, so we are taking the range between A and B, and we're adding it to B to go upwards for the extension. Same thing for the for the BCD wave. We're taking the range of the B and the C, and we're going beyond C and going downwards. Alrighty, so for this particular wave, we're starting out and build our projections starting at this point. Now, with extensions, we're using slightly different ratios, and they go beyond. Here we go up to 200. In an expansion, we go up to 261. Why? Because we're using a smaller range. Because we're using a smaller range, we need bigger ratios to go even further out on either side. But in an extension, because our range is already big between A and B or between B and C for the extensions, we're only going up to 200%. Okay, so A and B, apply the ratios, add it to B, and go upwards. For B and C, D has to be established. You do the ratio between B and C, and you start at C, and you go downwards. Okay? Same thing with alternates. Now, alternates is a fun one because just like the name implies, you are starting at an alternate point. And that's why I caught myself doing the mistake later. The way I remember these is that alternate is the only study that starts out at a different time point or a different pivot than the swing it originated from. So if we are to take these levels, the 138.2, 61.8, and the 200, and try to identify the swing that it applies to, we find that it actually applies to this swing right here. Okay? That one. Because what had happened is, let's start that out. Mark them. That's A. That's B. Oops. Let's try that again. B. And C. Hello. Computer's not helping me. C. Okay. What we have done here in this particular alternate is we've taken this price range from A to B, applied the mathematical ratios to them, and then we started the expansion at point C, not at point B like we did on all the other ones. In this one, we started at point C. Okay? And that's where we got the 38.2, 161.8, and the 200. And as you can see, price here found support at the 200% level. So that's how you remember alternates. So to recap, PriceMaster Pro looks for confluences among Fibonacci studies, and those are internal studies and external studies. The internal studies are the retracements as such. The external studies are the expansions, the extensions, and the alternates. To produce confluence, as you can see here, this is a chart that shows all the retracements, the extensions, and the alternates and the expansions applied. And what PriceMaster Pro tries to do is to look for for two or more confluences, as the definition says, common elements, for a probable outcome. So in this particular case, these levels were calculated before price moved down to this level. So what it was looking for is to identify this area and identify this area, okay, and somewhere here as well, that these are potential levels for price to react to. And as you can see, price did react. It bounced off here, it bounced off here, and it found support in this area. So Price Master Pro identifies these common elements, which are the price levels, for a probable outcome, and that is that the price is going to react to these levels somehow. And in later videos, I will go into details as to what these reactions will be and how you can use them to your advantage. Ultimately, what we've done will give you this chart. Okay, so this level. Now remember, these lines were based on many swings and not just the most two recent swings. So Price Master Pro would have taken into account all these swings, not just the last two. I'll only use the last two to make it easy for me to track things and easier for you to see. But Price Master Pro would have taken all these swings in the past and calculated the difference, measured the different swings, and done its analysis for you within a few seconds. Now, what I'd like to talk about next is exactly how does Price Master Pro determine these levels that you're looking at: blue support, red in resistance, or red as resistance. So the first thing that it does, it determines all the available swings. And what do I mean by swings? By swings, whoops, I mean, if I were to use this zigzag right here, and I try to make the chart smaller, anytime the zigzag switches direction is a swing. So here's a swing, here's a swing, here's a swing, here's a swing, and so on and so forth. These are all swings, and also this big swing right here, and this is a small swing right here. So what it will do is we'll measure all these small and big swings, which one is an AB swing for a retracement calculation, which one is an ABC swing. So we've got an A, we got a B, we got a C here. This is a C because it never broke this level, so this one qualifies. Here's an A, here's a B, here's a C, or here's an A and a B. It will do all that automatically. It will determine all these swings, and then it will identify all the combinations available: big, small, intermediate, and so forth. Okay? And then it will perform these price analysis that I just did. It probably took me half an hour to do so, but Price Master Pro will do it in a much, much faster fashion. It will take all these price swings and automatically determine the levels that are there. So I'm going to pause this video for a moment, and then I'm going to start it back up when I have all the swings available on the screen to show you. So I'll be right back. Okay, I'm back. Here's the retracement chart that I had the retracement marked up, and you will see how Price Master Pro determined all the Fibonacci analysis on all available swings. Let me make this smaller so you can appreciate what I'm talking about. You see how far back it goes? It goes back a very long period of time to determine all the Fibonacci levels, all the retracements, all the expansions, all the extensions, and all the alternates. But as you can see, this is a pretty messy chart. It is very, very difficult to trade, let alone to see the price where it's going. So we had to find a way to clean this up. And that's the next step that Price Master Pro does, is that once it calculates all the retracements, extensions, expansions, and alternates, it will rank all these levels based on the size of the swing and the price, the time frame, and so on that it's applied to, and assign a strength level to each of these lines, and then sort them out by strength and spits out the strongest confluence area. Okay? So once it ranks it, it looks and say, okay, where do I have confluence? So in this particular chart, if we take, if we just do it by eye, we've got a confluence here. We've got a confluence here. We've got a nice confluence here. And a nice confluence here. Okay? It's not cooperating. So I'm just going to do this. Okay? And also we can go back and you can see a confluence in this area, you can see confluence in this area, we can see one in this area, and so on. So it will go through all of that does it automatically and spits out for me the best levels available, the levels that I should look for. Okay. Now, do bear in mind that when this happens, now we all know that market is dynamic. Swings change and they develop, new ones come by, and some get violated, so they're no longer valid and so forth. And Price Master Pro is very good in tracking all of that. So there is no room for it to repaint anything because Price Master Pro only takes in consideration swings that have already been in existence, static swings on the other hand, not dynamic swings. So it will take, when the market opens, it will look at all available swings that are already established and will run its study and its analysis and look at all this mess to produce nice levels for us. Okay? When the new day opens, or when a new day starts, it will keep track of all those swings that are happening and will take them in consideration the following day. It will not take him in the present day, it will take him in the following day. Simply to avoid lines appearing and disappearing and you get a lot of repainting. And it does that very, very efficiently. So there's, you don't have to worry about repainting at all. Now, with that said, if a previous larger swing happens to have a projected price level at some point in the future that overtakes all present swings, that's when you may see a line tightening, moving from one level to the next. It won't disappear, but it will move from one level to the next because Price Master Pro has determined that this level shouldn't be down here, it should be up here, but that will not happen until the following day. It will never happen the same day in real time. So that repainting is not something that you have to worry about. Now, I know I've covered a lot in this section, and I made a little bit of mistake, but then I corrected myself. So I just want to summarize everything really quick. In this section, I answered the question, how does Price Master Pro work? And Price Master Pro works on the principle of confluence or clustering, and we've defined it as a convergence of two or more elements to a common probable outcome. And we said the element in this case is a Fibonacci level, and the common probable outcome is market reaction to that level in the form of support or resistance. We don't know why that phenomenon happens, but we do know that it does happen, and we try to capitalize on that. And confluence is not just, it doesn't just occur for price, but it also occurs in time and in indicators when you're trying to trade a setup. I've also covered the two different types of Fibonacci price projections. Those are the internal and the externals. The internal is a retracement, and the externals, there's three of them, are the extensions, expansions, and alternates, and they're also known as parallels. I've briefly discussed the algorithm by which Price Master Pro determines the lines, and that is it determines the available swings, all of them, and then it determines all the Fibonacci levels based on the four formulas that I described earlier. And then it goes through, sorts and ranks, and determine what is the confluence area that has the highest probable rank, and present that to us as a single line of support or resistance. With that said, I will end this section, and I will see you in the other section where I will briefly talk about how is Price Master Pro different. So, see you on the other side.